Hello traders, welcome to this live webinar. We're going to take a look at Elliott waves and price swings in general, using fibs and moving averages to determine wave 3. All right, so wave 3 are very interesting. Wave C2 sometimes, by the way, so whether it's a wave 3 or C, really not that relevant. They are quick, impulsive price action that are typically great for trading because of that strong price action that we see. So price tends to go further to targets, and there's a lot of space for catching bigger wins because of that. And typically the trade develops quite quickly as well because it's impulse. So waves 3 are interesting from a trading perspective. We're going to discuss in this live webinar some tips to how to find those waves, all right, and basically measure that before, during, and after. All right, so let's do that right now with the live chart. Thanks for joining. My name is Chris Svorcik, by the way, from Elliott Currency on this 3rd of May, new month again. All right, just finding the chart. There we go. All right. So, we can start with the euro dollar. I do want to take a look at our instruments as well. So, for those of you that are maybe new to this webinar, or maybe watching for the first time or just a few times, basically, my methods are based on moving averages, Fibonacci, and fractals. Some proprietary indicators as well that help me analyze the relationship between price and moving averages. But the core three things are really moving averages, fibs, and fractals. Price action too, by the way, and oscillators. And basically trying to ride these price swings. So the price swings, up, down, corrective, and impulsive, are basically the DNA of the charts, right? Together, they make up price charts. They make up price patterns. They make up chart patterns, basically trends, ranges, and they're basically building blocks of the chart, right? And the candlesticks, of course, are the smallest unit. But these candlesticks typically belong to a bigger price swing, right? Because we can see, for instance, that this piece lower, it has maybe 20 candles in it, right? Let's count. It has 38 candles, separate candles. But I think everyone can see that there's consistency in that particular piece between those two red vertical lines, that is a bearish price swing. There is one characteristic that particular price swing has. Most of the candles are bearish. Most of the candles, some of the candles are quite strongly bearish with quite a decent size. The candle closes are near the low. The bullish candles are quite small, indecisive, and a minority. So that's why that this swing is one price swing. And using price swings gives us an extra edge. Not only candles themselves are important, but price swings also give us a lot of information about the market. Okay. Now, Elliott wave goes a little bit further. It also labels and analyzes those price swings. So if you know price swings, you already know a lot, and I think it's a great value in itself. And it's also the kind of the useful tool for Elliott wave and spotting waves. Because once you can spot the price swings, then Elliott waves is adding wave patterns is really not that much more difficult, I think, in a certain way. Okay. Now, my SWAT method boils it down, makes it simpler to trade those waves by using moving averages, fibs, and fractals. Because without those tools, spotting price swings and spotting waves is much more difficult, in my view, at least. Okay, so that's why my SWAT method makes it simpler to do that. Now, these price swings sometimes are very quick, impulsive, and could be some type of wave 3 or maybe wave C, because the Elliott wave theory is based on a 5-wave movement in one direction with the trend, followed by a 3-wave correction. All those waves are price swing, right? So this is one swing down, this is a swing up. This is a swing down, This is a sideways swing, and then a swing down. So we have 5 swings down, right? With wave 1 being one price swing, being a bearish impulse, wave 2 being a bullish correction, wave 3 being a bearish impulse, wave 4 being a bullish correction, and wave 5 being a bearish swing. This is because it was in a downtrend at that time. Then we get an uptrend, and we have a wave 1 bullish impulse, wave 2 bearish correction, wave 3 bullish impulse, wave 4 bearish correction, and wave 5 bullish impulse, because we're in an uptrend. Now we're expecting an ABC down. We have a bearish wave A impulse. We should expect the bullish wave B correction, and then again the bearish wave C impulse. So each wave is a price swing. Now in this particular webinar, we want to focus on the wave 3, because the wave 3, or wave C, if we're wrong, it could be a wave C, is impulsive and price goes far, and it's very interesting. So what kind of tips and tricks can we use to find out when there is a wave 3? So one of the things that we can use is the Fibonacci tool, first of all. As I said, my method is, the core of my method revolves around and focuses on moving averages, fibs, and fractals. Okay, so one of the tools we can use is the fib, actually. If we think there's a wave 1, followed by a wave 2, and of course the wave 2 must have a higher low, like here, or a lower high, because if there's a lower low or a higher high, then the trend is still active, and a wave 2 may never break the bottom of wave 1. If this is the bottom of wave 1, if we're in an uptrend, if this is the red lines, the vertical red lines indicating the end of the downtrend, the price may not break the bottom of that downtrend. May not break the bottom. Sorry. Otherwise, we're not in a reversal. We're still in the downtrend, right? If we expect a reversal, if we expect a wave 1, 2, then this wave 2 may not break that bottom of wave 1. Okay, so that's one thing. On an hourly chart, this is a 4-hour chart. We would like to see 5 waves up within that wave 1, which we do see, wave 1, 2, 3, 4, 5, and we would like to see an ABC down, ABC. So that, we see that. We see 5 waves up, we see 3 waves down. We see that here, with this bullish price action here, we see a higher low emerge as well, and we see a rebreak above the 20-minute. So that is confirming that the downtrend is perhaps over, and we're going in uptrend. But just because we're in an uptrend doesn't mean we're in a wave 3 necessarily, right? It could mean that we're in a wave 3 or a C up. But that's already a very good indication that at this point, it might make sense to look for counter trend ideas to the upside. But it's not yet the wave 3 confirmed, or it's not, I would say the odds of a wave 3 are not necessarily higher than a wave C as yet, unless we look at the bigger context and use higher time frames to identify the bigger kind of connection. If we do that, then we could see that a wave 3 is likely because of the fact that we had a wave A, B, C finished. So in that case, because of the bigger ABC pattern and the fact that price is at the long-term moving averages, if we add the daily chart, we might come to that conclusion that on the hourly chart, and the 4-hour chart, we are in a wave 3 or starting wave 3. Okay, but that's because of the bigger perspective and the bigger time frames. If we ignore that for the moment, based on this fib, it could either be a wave 3 or C. By using the fib tool, however, we can identify the key zone, which is the minus 61.8 target. Between the minus 61.8 target and the minus 100 target, basically, that's where the wave C typically finishes, and the old trend still continues. So if we're in a downtrend here and we have a wave C, then this zone will typically cap price. Price will stop anywhere in this zone, and the old uptrend should typically continue. In this case, the old downtrend, sorry, in this case, the downtrend we would expect. Minus 272, minus 61.8 target, minus 100 target is the max. Now at the minus 100 target, we see the 144 EMA. So if price starts to break above the minus 161.8 target, if price starts to break above the minus 100 target and the 144 EMA, then that's already a strong signal that this is not a wave C, but a wave 3. So with price action pushing above the second tip besides the fib is the 144 EMA, right? So when price is moving away from the 144 EMA, that's the second tip that we're not in a wave C, or we're probably going to be in a wave 3. So this particular push here, right here, is making it more and more likely that it's a wave 3. So yeah, basically when we have pullbacks into the 21 EMA, basically those are good retracements or breakouts above the 20 EMA or breakouts above the fractals. That's typically confirming the wave 3 continuation, as you can see. And yeah, we got a full push higher indeed from that point. So those are some of the confirmations that are confirming the wave 3. The fib targets, the break of the fib targets, the break of the 144 EMA, and price respecting the 21 EMA. Now we have the fractals that are basically away from the 21 EMA, here, here, and here. Those are all extra confirmations in my view, specifically this one because it's so far from the 21 EMA, plus it's also above the fib targets. So that's another clue. I think also maybe a fourth clue that this is a wave 3 is the fact that the HMA is staying above the 21 EMA. So yeah, basically I would say that here or here, as the HMA angle goes from bearish to bullish, that and stays above the 20 EMA, that's a fourth kind of clue that helps us identify the fact that this is a wave 3. And a fifth clue could be that there are fractals after, this is the main fractal, right? But there are fractals after that are also away from the 21 EMA zone, or the candle of the fractal, I should say. And price breaking through those fractals here and here, I think a fifth clue that price is confirming the continuation of that wave 3. Okay, so those are some of the options of trying to identify a wave 3. Now, that's on this time frame. I mean, we can use multiple time frame analysis, of course, to do extra confirmations. Let's do that now on a daily chart, for instance. The fact that we see 3 bullish candles here, indicating a momentum, or here, worst case. So 3 bullish candlestick pattern, I think a clear sign that there is some momentum taking place. Now that doesn't have, just because we have 3 candles, we had 3 candles here too. That didn't go anywhere, by the way, right? So that's not, one piece of clue. One clue is not everything, of course, but specifically after the fact that we had 5 waves completed here, we had an ABC completed here. This 3-wave pattern is more important than maybe this 3-wave pattern. On an hourly chart, let's zoom in. An hourly chart, I wanted to show you something as well. And I forgot what that was. Hang on. Oh yeah, now I remember, sorry. Yeah, on an hourly chart, basically the oscillators themselves, here looking at the oscillators, basically we see price moving around the 21 EMA band and the oscillator moving around the zero line, actually, right, the middle line there. So it indicating a sideways correction after a strong surge up. And you can see that here we have 10 to 15 candles away from the 21 EMA zone. That is indicating momentum. We have it here, 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 here on higher time frames, here. That's indicating a lot of momentum on this hourly chart. The more candles that are away from the 20 EMA, the more momentum. So that is definitely another confirmation of wave 3. Price oscillating around the 21 EMA, another one actually. And with the oscillators indicating the same, we can see that this breakout here likely to see a follow through to the upside. One more thing on both the hourly and 4-hour chart or let me say it this way, your trend time frame and your time of your maybe your entry time frame. Another thing you can look for is the Wiz tool. And yeah, on the 4-hour chart, yeah, it's not useful at this point, but the hourly chart, I think it would be. Sorry. There we go. All right, and you can see that basically price was 1, 2, 3, 4, 5, 6. You know, it's nicely up above these green levels, indicating a trend. And yeah, here it does reset because it just comes close enough to the 144 to reset, but it quickly moves away from it, goes above the Wiz 4, 5, and up it goes. So it stays nicely above those higher Wiz levels as well, which is another confirmation of that. So let's take a look at another example, a different spot. Now these waves 3, are not going to be always the same. They're not going to be identical. There are going to be many differences. Price patterns repeat, but they're also unique in their own situations and footprints. So there are always going to be some small differences typically. But for instance, here there was a wave 1, 2, and a wave 3. So of course, the fact that, let's review some of these things, right? So here we had price moving away from the 21 EMA zone, for instance. That's one thing we have here. Again, price moving away from the 21 EMA zone. We have a fractals here from the 20 EMA zone moving away. And here we have, what else we were looking at? The 144 EMA. We had a break of the 144 EMA right here already, and then a pullback to it and bounce at the 144 EMA. We had fractal break here and here below it. The fib itself was a bit slow because, as I said, right, the minus 61.8 target is typically the wave 3 confirmation. So here we had an exact bounce at the minus 61.8. So this is difficult if it's a wave 3 or C from a fib point of view. We would have to wait till here with this break until it became more likely that this was a wave 3, in fact. So this was a little bit shallow wave 3, to be honest. Untypical. Typically, waves 3 go further. But anyhow, followed by a correction, typical for wave 4, and then breaks through these fractals for a push lower. Let's take a look at maybe more a typical wave 3. We're not always going to get perfect wave 3, to be honest. Even catching wave C is still quite good because look at this. You had to move up, correction, and if you trade this piece up because you think it's a wave 3, but in fact it's actually a wave C. And why do we know it's a wave C? Well, it's simple. Just put a fib on this swing, and you can see that it went to the minus 272 target. Wave 3 will go way further than that, right? So if it stops at the minus 272 target and reverts at that level, then it's a wave C. So this was a wave C, but catching that wave C is still pretty good. There's still plenty of pips there. Now, of course, you might be unlucky if you don't know where that minus 272 target is and you were to enter to the upside as it falls. Of course, it could still be a loss. Everything is possible, of course, but in trading. But if you were lucky enough, or hopefully your strategy was good enough to catch the upside here, then there's plenty of space to catch some positive trades, despite the fact that it's not a wave 3. And here too, we had a down followed by an up and a down. That's probably more an ABC pattern than a 1, 2, 3, right? Because you see, it only went to the minus 272 target. So not saying that only waves 3 need to be traded, not saying that at all. Just saying that even wave C could be great. There are many swings that are not a wave 3 that are wonderful to trade as well, but waves 3 are special and are extra kind of, I think, beneficial. So just trying to share some tips and tricks how to spot those wave 3s. That's all. Okay. So here we don't have any wave 3, but we do have one here internal hidden a little bit, as you can see, because this is a wave 1 down, wave 2, we have a higher low. And indeed, look, we went down to the minus 61.8 target, minus 100 target. But as it breaks through the 144 EMA, as it breaks through these fib targets, this is a wave 3. Now that wave 3 extended to the minus 161.8 target. So trading here, there was not many pips in the wave 3. If you waited for the break of these targets, there was not much space there, 50 pips. But maybe it was good enough to trade the follow through, because if this is a wave 1, 2, 3, then we do expect a wave 4 and 5. So maybe trading that wave 5 would have been good in this case. And if we put the fib on the wave 3, you can see it went to the 38.2 fib, down to the minus 270 target. So trading that wave 5 would have been maybe interesting at the 38.2 fib, based on the fact that this was probably wave 1, 2, 3. So this is not a 1, 2, 3 here. Right here is not a 1, 2, 3, but we had an internal 1, 2, 3, 4, 5 in A. We had an ABC up, and then we had a 1, 2, 3, 4, 5 probably down. Let's put the fib there. One, two. And as you can see, breaking through these targets, we got to follow through to the minus 200 target. That was an extension of the wave 3. So, where you trade that wave 3, whether that is at the beginning when the wave 1, 2 is taking place, or the breakout, or after, somewhere below the lows when it's gets into these targets, or when you wait for these targets to break and trade maybe just on a lower time frame. All of it is possible with wave 3, right? These candlestick patterns at the fib levels could be the beginning of the wave 3. This breakout candle confirming the continuation could be a way of trading it. The break of this fractal indicating a lower low could be one way of trading it. Any pullback into the 21 EMA zone here could be one way of trading the wave 3. Trading these fractals or zooming into lower time frames here to trade this piece, all possible with the wave 3. We have basically, let's take a look at another wave 3. This is a little bit big, this wave. See if we can find a little bit better wave. All right, so here we have fractals. We have price, first of all, in this case, above the 144 EMA, right? One of the key characteristics is the break of the 144 EMA or a bounce. This is a bounce. We have price above the fib targets here, as you can see. We have price above the Wiz levels. We have a rebreak above the 21 EMA. We have fractals above the 20 EMA. We have breaks of the fractals. We have momentum candles away from the 21 EMA zone. All of that is confirming a wave 3. So the higher low here, the momentum away from the 20 EMA, the fractals, the 144 EMA bounce, the fib target breaks, the Wiz level breaks, all of that, is adding up step by step to confirm that it's a wave 3. And as the confirmations pick up, as you get more and more confirmations, it is more and more likely it's a wave 3, right? Here, we don't know for sure. It looks like a start of a wave 3, but we're not sure yet, right? As it gets more and more confirmations, it is more and more likely it's a wave 3, right? And at this point, it's almost certain. So we expect a wave 4. We can still trade the wave 5 to the upside. Whether when you trade part of that wave 3 or the beginning, middle, or end, or even if you just pick up the wave 5 based on the wave 3, all of that is still valuable information there for trading. Okay. Sometimes you're not going to get any waves 3, right? And this is quite choppy and rangy price action. So we're not going to see this time frame any waves 3, maybe internal wave 3s on lower time frames, right? Here we see a big wave 3. There's a lot of upside here, right? So for instance, let's put a fib from here to here, right? So here, this break above the minus 61.8 target. Typically, minus 61.8 target is enough for the wave 3 confirmation. Minus 100 is the extra kind of level. So yeah, this clearly sending this up. Look at that break of the 161 per day target. Boom, wave 3 continuation going very far. In this case, it was a very strong wave 3. All right. The higher low, the bounce at the 144 May, and the fractals away from the 21 EMA zone. Oh yeah, we also talked about the HMA, of course, the HMA pulling away from the 21 EMA here and here and here, all of that confirming the fractals, the break of the fractals, the whiz levels, break of whiz 7, break of whiz 6, all of that confirming the upside. The momentum here, the momentum diamonds indicating that price has been 10 to 15 candles away from the 20 EMA, all of that indicating that this is a wave 3. All right. So anyhow, I hope that this webinar has helped you identify wave 3s a little bit better. All right. To get a full grasp of everything, become a SWAT member. Simple wave analysis and trading. It's more than waves. It's more about price swings and trading it in a simple way with my methods that I explain. It's they're basically 24 hours, I think, of materials with 70 videos, all strategies, templates included, PDFs, ebook, all of that there. So there's a lot of good value there, I think, for anyone who wants to learn to understand the charts in a deeper way. So I hope to see you as a member. In any case, wish you all great trading and see you soon. Cheers.